A bank statement reconciliation. Okay, a bank statement reconciliation is done by a company each month, and it's going to reconcile the cash general ledger account, that's the company's cash account, to the bank statement. In other words, the records the bank shows are in that cash account. So in other words, we need to reconcile the bank statement with the cash general ledger account at the end of each month. So the first thing that we're going to do is look at the bank side. We're going to start off with the balance per bank statement at the end of the month. Now, make yourself a note that this comes from the balance at the end of the month. In your bank statement, you'll have a beginning and the ending, and you'll want to pick up the ending because we're going to reconcile all the way to the end of the month. So bank state balance of cash. So now we're going to look and see if there's anything that the bank needs to add. So things that your bank would need to add would be, for example, deposits in transit. This is like if you dropped off a deposit at 4:30 in the afternoon. You already recorded it in your cash account, but the bank has not yet recorded. You would have a reconciling item that would show that as soon as the bank updates the records, they will add in that deposit. You could also have a bank error. So if the bank subtracted out something that they shouldn't have, you would call the bank and say, hey, could you add that money back? That was an error. And as soon as they updated the records, that would get added back in. Now, the next thing you would need to look for is anything that would be subtracted. That would be, for example, if you had mailed a check and you already recorded it in your cash account, that would be a credit to cash, but the bank had not yet received that check, so it had not yet cleared. And that would be a subtraction. We would call that an outstanding check. And then you could also have a bank error. So if the bank deposited money that did not belong to you into the account, you would call the bank and say, hey, you need to subtract that back out in order to get to the true balance. All right, and then you would start with your balance per bank statement and add and subtract those adjustments and come out to your adjusted bank balance. Okay, next we're going to look at the book side. We need to see what adjustments or what we need to adjust for the book side. We're going to start off with our balance per books. In other words, our cash account. So you're going to look at your ending balance for your cash account, and then you're going to look to your bank statement and see if there are any items that the bank added that you have not yet added to your cash account. So one example could be collection of account or note receivable. So the bank may collect from customers on your behalf. So it may be automatically put into your account, but you may not have made the debit to the cash account yet. So when you open up the bank statement and see that collection, you need to make an adjustment. Other additions could be interest revenue. So if the bank pays you interest on any bank account balance, so you may open up your bank statement and see that they've given you interest revenue, so you need to debit your cash account for that. Alright, and then subtractions could include your bank service fee. So your bank may charge you a service fee of $7 per month, so you don't record that fee until you open up your bank statement and see the fee. So you will need to make a deduction to cash or credit. You need to credit your cash account. You can make EFT payments online, and you may not record these in your cash accounts until you look at the bank statement, and then from there you'll have a reconciling item to subtract from your cash. Also, you could have in each of these a book error. It could be an addition or a subtraction. So if you have a book error that you need to add back, you would put it here. But if you had a book error you needed to subtract out, you would put it here. Alright, and then you're going to go down here and you're going to put an adjusted book balance. Now, if this number and this number are the same, you will reconcile. And if these numbers are not the same, you will continue to look for discrepancies between book and bank until you're finally have found everything and you're in balance. From there, you're going to make journal entries. You will need to update your records to show everything that happened down here on the book side. So let's look and see how we can do this. All the additions are going to be debits to cash. Alright, so I'm going to go over here and do this. So we have room. So here's our debit to cash. And the first one's going to be a collection of an account or a note receivable. Let's just say that it's accounts receivable. So we would credit accounts receivable. Because that we've received the payment from the customer, they paid us, and so they no longer owe us. So we reduce that asset and we debit it because we got the cash. Okay, and then the interest revenue, this would be a credit to interest revenue. Now, the book error, so we need to look for the actual entry where the error took place, and we would need to reverse it. So it would just depend on where it was. Okay, then we're going to look at our subtractions. So those would all be credits to cash. All right, so for bank service charge, we usually debit an account called bank service fee, bank service charge, something like that. So we will debit it. Okay, or bank service expense. And then for the EFT payment, there's several ways you could, depending on what it was. Let's say it was for utilities, so we would debit utilities expense and credit cash. So we would credit cash for the total of those. At this point, our beginning cash account balance equal this right here, our balance per our books. Once we make these additions and subtractions, or in other words, our debits and our credits to cash, then our ending balance will be this amount. And at that point, we can say that we are reconciled. Now let's look up here at the bank for just a moment. The bank is not yet updated, but after the next day, they will probably have recorded our deposit in transit. If we have any bank errors, we'll call them and update that. If we have any outstanding checks, as soon as the customer that we wrote these checks to cashes the check or deposits that money, then the bank will update there. So most of these will get updated automatically. So we don't really need to do anything except just check and make sure that the bank does update and comes up to this adjusted bank balance.